How you doing, guys? It's LSP. It's currently the 1st of July 2019. The time is 10 o'clock AM GMT time. So I posted something on Twitter and I was saying I wanted to do a video regarding Monday, Tuesday and Wednesday's price action and how we can use this information to arrive at a better, more contextual trade. Sorry, I'm just adjusting the mic. A better, contextual trade, something that makes more sense. And what I like to do, generally, Monday, Tuesdays, and Wednesdays, for me, I try not to trade on Fridays and I try not to trade on Mondays. Okay, but I've been incorporating Monday trading and Friday trading as studies into my trading on my study account. And again, just to really make it clear, I don't deviate on my main account. That's pretty much the same every week, week in, week out. If there's a trade there, I take it. If it isn't, it isn't. I only trade Tuesdays, Wednesdays, and Thursdays on that account, and I'm only looking for 20 to 30 pips. That's it. Once I've got that, I'm pretty much done. But I do a lot of studies, and the only way to kind of gauge whether or not Monday is going to be a viable trading day for me, or Friday, or a particular trading session, for example, is to trade it for a while and see how I get on, assess the results, and do it, in a controlled environment that's not going to affect me psychologically, or put me in a really messed up emotional state. It's just a very small account. It doesn't really make a difference in that respect. So, but obviously I'm putting a little bit of skin into the game as well. It is real money, and that's what keeps me grounded. So I've been doing these studies, and what I found, okay, I use pretty much everything that I'm going to go through now from a contextual standpoint, but Monday's trading for me personally, generally what I found is if you have like FOMC or you've got non-farm payroll week, okay, the move tends to happen quite early in the week, sometimes Monday, sometimes Tuesday. Wednesdays and Thursdays, mainly Thursdays, tends to be the kind of sideways messy, day, and then you get obviously the craziness on Friday. But when I approach trading, when I approach the week, okay, I sit over the weekend and I do my analysis. I look at the higher time frames, get a gauge or a feel for where I believe price is going, okay, and then once I have that, okay, I sit down on Monday. I let Sunday trade. I'm not a Sunday trader, but I let Sunday trade, and then I'll sit down on Monday and I'll start to think about where the high and the low could form for the week, okay. And now that doesn't necessarily mean I get it right. What I'm saying is when you put yourself in that mind frame or that mindset, and we'll do it in a minute, I'll show you what I do. But when you get put yourself in that mindset of where is for example, cable's going lower, okay? This is, I'll just zoom in one. You can see this is Sunday's trading, nothing to shout home about. We had a small run up, a small run down, small run up, and then obviously this nice drop, okay? So for me, I don't look at this and say, well, where's the high gonna form for the week? I'm looking at it and I'm thinking to myself, right, where's the low likely to form this week? Okay? Now, what I'm about to go through, guys, is very, very powerful, but you have to understand, it's contextual based. It has to be based on higher time frame draws on price. You can't just say, well, the low's going to form here, and then if the low does form there, take a trade, because you have to understand, why is it forming there? Is it a stop run? Is it a pause? Is it a continuation? Are you going to get a relatively good bounce from there? In terms of, obviously, if it creates a low, you get a nice little bounce or a rally. Does it make sense? Is it probably just going to go there, and hover around and not really do much? If you take a look at, for example, we had, I know it's late in the session, but this Friday session here, okay, on cable, last Friday, created the high of the week, and then you have a very small relief. Yes, it's very late in the session, but just assume for argument's sake that it happened here, okay, and you had a little bit of time left, maybe 2 to 3 hours, maybe 4 hours, to maybe get a small pullback, 20 pips there. It's not viable here. It doesn't really make sense, It's going to be a slow drive. You've had a really nice long run all the way, and these extended moves, where it just grinds and grinds and grinds and grinds and grinds into what was the high of the week this week. It's very unlikely you're going to get a decent pullback from this. unless it capitulates, unless it goes climactic, bang, you know, and it just really starts to accelerate, and then it fulfills an objective, and then it starts to pull back. That's when you're probably going to get something like that. So it's contextual based. You have to understand the context and the reasoning behind why these highs and lows form. So I'm looking at cable, I'm saying to myself, right, where's the low probably going to form this week? It's Monday, it's early in the week, there's absolutely no reason to be rushing. You know, I'm only looking for one trade. I'm looking for one good quality logical trade that makes sense. Okay, so I'm looking at this, and it's the hourly chart, obviously, because you can see it. You can see the full weeks on the hourly. You know, you get a couple of weeks data. It's nice to see it that way, and you can see the liquidity pools. You know, they show, you know, much cleaner. So I'm not going to go into the high time frame stuff. I'm just going to focus on this for a second. So, like I said, we've had a nice drive lower. Okay, and you can see that we've already taken the liquidity below this low. Okay, so if there are any stops, any liquidity, any reason, whatever it is, for price to go down there, it's already done that. Okay, so that's good. It's fulfilled one objective. You know, have we had any relief so far? No. If we just drop down to the 15-minute, just have a quick look, you can see, you know, it's kind of been very controlled price action. Okay, it's not like one aggressive drop. You know, there is a small inefficiency here, but you know, and an inefficiency here, but it's a nice grind. Okay, all of the liquidity was taken here. You know, and we had a very small 2-bar lift. Nice drop, nice drop, nice drop, nice drop. It's nice and controlled. It's not erratic. Okay, so going back to the hourly, you know, we can see there is an inefficiency here. Okay, so we'll draw out the inefficiency. Okay, so we can see price could potentially come here, right, into this area down here to fill in this inefficiency. Okay, and there's also another very small inefficiency here. Okay, just there. Okay, so great. We have levels below us where price could potentially come to. All right, so we'll mark those off. So sticker number 1 there. All right, so we have area number 1 and we've got area number 2. Let's just put it underneath. Okay, so we've got 2 areas where price could potentially go. Now, it doesn't mean it's going to go there, but we've got 2 areas where price could potentially go. We've got the inefficiency here and we've got the inefficiency here. Okay, right. So right now it's Monday. So what do we say to ourselves? We say, okay, look, if we get a bounce from here, all right, because you've got to kind of step forward and step back and kind of figure out like a projection forward of the different scenarios of what could potentially happen, right? And if one of those pans out through experience, obviously the more you do this, the more experience you gain, and then you can act according to whichever one pans out, right? So like I said, we've got number 1 here, we've got number 2 here. Now, if price comes all the way down here and fills in this inefficiency, okay, is it likely to form the low of the week? I don't know. But with it being Monday, okay, there's a couple of things that I start to think about. If price starts to kind of just hover around here, and then tomorrow, you know, we have a little bit of a rally, and then it drops down, it fills in the inefficiency, and then starts to rally again, that could potentially be a Tuesday low of the week. Okay, if it drives all the way down there today, okay, then it could go into tomorrow, have a small little rally, then drive lower to fill in the second inefficiency, and then it become a Tuesday low of the week. Okay, if it just drives higher from here, okay, I wouldn't expect it to be a Monday low of the week. I would expect to drive lower because we have the inefficiencies below us. Okay, so there's the third scenario. If it drives higher, where's the level that I would want price to go through, okay, before I would consider it being negated completely, and it's probably going higher. Yeah, this small area here. Yeah, so effectively I need to see Monday's high of the week taken, you know, and then I would expect maybe some of these levels to be taken, and then the inefficiency up here to be traded to. All right, this one up here, but we're miles away from that. It doesn't look like that's, you know, going to be the case at all. It has to clear this high for me to even consider that. And remember, once it clears this high, we've got a good 36, or let's just call it 40 pip range. So we would have a viable trade up there, but unfortunately, that's not what's happening. So we have to go with the, you know, the previous scenarios. Another scenario, number 4, or potential scenario, you know, sideways, sideways, sideways. Boring Thursday. Wednesday drop, fills in the inefficiency, rally, Wednesday low of the week. Okay. Another scenario, it starts to kind of grind lower, fills in partly a part of the inefficiency, starts to rally. Tuesday drops down, fills in the inefficiency. Wednesday drops down again, fills the second inefficiency. Wednesday low of the week starts to drive higher. Okay, and so on and so on and so on. Now, I've said this before, and it's not me. It's just basic common sense. You know, there's always going to be a high and there's always going to be a low of the week, right? And there's always going to be a high and a low of the day. So with that in mind, we know they're going to form somewhere. We just have to figure out where's the best possible or the most likely, place where a high and a low of the week should form. Now, like I said, I've got two areas down here where I believe where I believe the low of the week should potentially form. Right now, do I need to do anything now? No. And this is another thing. When you do this, and you have this in mind before you go into the trading week, it stops you from trading something that simply isn't there. I could open a short right now and get lucky and it goes all the way down. But let's say I open a short and it starts to rally, okay, and it trades into this area here, which would make perfect sense, okay? So this area here, if price rallies and trades into this area here and leaves this inefficiency open, this is a good place to be taking a short for a study, as an example, okay? But if I open a trade right now, I'm going to sit through all of that if that happens, probably, get stopped out or take the trade off, because I just can't take the pressure of watching it lose and, oh, I'm wrong and everything else. Then watch it go low and fill in the inefficiency and start ripping my eyeballs out and getting frustrated because I was right. So you don't need to do any of that stuff. You've got to put yourself in a position, right, as a trader where you are very, very clear on what it is that you're looking for, yeah? Very, very clear on what it is that you're looking for. You know exactly what's going on in price. You know exactly what you want to see, and then you act accordingly if that happens. If it doesn't, you don't do anything, and you wait till the following week. There's absolutely no rush in trading at all. Yeah, you can go 2 to 3 months, and maybe only get 2 to 3 trades, for example. Maybe 1 trade a month, and then you get a stint of 1 trade a week. Then you don't get nothing for a month, and so on. But by the end of the year, you might be down 35 pips, but you're up a couple of hundred pips, for example. Those couple of hundred pips can mean anything. Yeah, it's dependent on account size. It's got nothing to do with the actual pips themselves. So there's absolutely no rush. There's never a rush. There should never be a rush. You should always be relaxed and controlled and know exactly what it is that you're trying to do when you sit down to trade. So like I said, lots of different scenarios, lots of different things that could be forming, okay? And I do like to look at the hourly chart because the inefficiencies, they show up a lot clearer, okay? In terms of stops, there's nothing for us to look for in terms of stops. There are small stops. There are going to be levels and, where people potentially might be long, and they're trailing their stops, some logical areas, maybe one here, which has already been taken, potentially here, for example. But there's nothing really, in terms of stops until you get all the way down here. Okay, so it's just inefficiencies and inefficiencies. This level right here is very interesting. Okay, and I'm going to note this, and I'll probably put the mean. I believe it's. I can't see what I'm doing. There we go. So this level right here is a very interesting level. And if price does get down here, I'm going to make it quite thick to fill in this second inefficiency down here. Then it would make sense that price would reach into the mean of this up candle right here. So there's a lot of reasons. Then we start to look at the ranges. Okay, what ranges do we have to play with right now? So right down to the last inefficiency, we're talking 50 pips. What's the likelihood that cable can move 50 pips, okay, in one day? Very, very high. Very high, okay? If you look at today's range, okay, we've already moved 69.5 pips. So we're good to go. In terms of inefficiency fills and everything else, we're good to go. So the only scenarios I'm looking for, and remember, this is purely price action based, nothing to do with the news, nothing to do with fundamental analysis, nothing to do with high time frame, nothing. This is purely price action based, price action study, just looking at the hourly chart, nothing more, nothing less. Okay, now I can look at the hourly chart for experience and know what the daily looks like just based on these 2 weeks here. Okay. And obviously, because I'm constantly looking at the charts on a daily basis, I already know what the daily looks like. I already know what the weekly looks like, okay? But right now, we're just looking at the hourly chart, and the only things that I'm looking for right now are 2 scenarios, okay? I'm either looking for price to move down to number 1 or number 2 for a potential low of the week, okay? And then I will assess, not just jump in, I will assess. And if the trade's there, I will take it based on my own personal setup, which I'm looking for a reversal in the market pace, right? Which is very specific in the way that it forms. Or I'm looking for a run back up into this area up here, okay? And what I'll do to make it really, really clear, All right. I'll do this level here, which would be the close of this candle. Okay. We're looking for 125.67. Yeah. So 125.65 to 125. Is that 25 or 26? Sorry, 126. 126.60 to 126.70. That's the level that I would expect price to go to if it runs higher. Okay, so they're my scenarios. If it runs up to this level, I will be looking for a potential short, and there's a very small inefficiency here and here, so it would make sense that it could do that, for example. Okay, but remember, I'm thinking low of the week. I'm not thinking high of the week. I'm not thinking run higher. I'm thinking low of the week, right? So a run up here before it, and this is very, very important what I'm about to say. I don't want it to go down to number one, then go up, okay, and then start to come down and try and fill in number two. That's not what I'm looking for, okay. I want the inefficiencies to be left open. The inefficiencies have to be, left open. I don't want price to rebalance before it goes up. So if it does go up first and the imbalances are still there, great. I will look up here, assess. If it's there, it's there. I'll take a short. If not, I'm looking for a move lower into number one or number two. And again, I will assess here if it gets there, and then I will assess here if it gets there. And I will look today, tomorrow, and Wednesday, and then potentially look for a trade on any one of those two days, i.e. tomorrow and or Tuesday and Wednesday. Okay, and that's it. So think about what we've done here, guys. We've gone through cable. All right, and again, this is all for education. I'm not telling people what to do. It's just all education. I'm not licensed to give trade advice. I'm just giving you my opinions, and these, for education purposes. We've looked at the the hourly chart of cable, and we said, I've gone through some scenarios. I know exactly what I'm looking for. I don't need to rush. Okay, there's nothing for me to do right now. I've got no interest in trading today at all. Okay, so if I want to now, I can just switch off from the markets and just go and do something else. I will reassess tomorrow. So this evening, I will look at the daily. I'll drop down to the hourly once between 10 o'clock and 11 o'clock GMT time, my time, in the evening. I will take a look at the chart. I'll have a look where we are, and then I will assess. Going into tomorrow, I will start to look for the different scenarios depending on where price is. Okay, and then, like I said, Tuesday or Wednesday, I will look for one of those two, one of those bunch of scenarios to form, to kind of present themselves. And if they do, I will assess if the trade sets up, because remember, the analysis and the trade setup are two completely different things. So if the trade sets up the way that I want it to, and it's exact in its formation, showing me exactly what I want to see, then I will get in. I'll look for my trade. Then I'll start to think about ranges and what I'm looking for in terms of my, my targets and stuff. So that's that. Nothing else for me to do right now. I will assess. I have some time this week, so tomorrow I'll do another video and we'll do a 2 to 3 day progression of a potential trade setup as it's forming. Okay, and the chart will stay the same as it is now. I'll just take that off because it's quite messy. But I'll do a 2 day, 2 to 3 day progression, and then we'll take it from there, and you'll be able to see hopefully if the trade sets up the way I expect. One of these scenarios, we'll take the trade live, hopefully, if it forms, and then you guys can get to see the kind of thought process that I go through. All right, so I hope the video finds you well, and I hope that you learned something from this video. Keep an eye on cable, and we'll track it throughout the week, and I will speak to you guys tomorrow. Take care.